the age of technology, so all of these things are,
I mean, but
yeah.
but the IRS just think everyone's honest and that they're going to.
Well, they know everyone's not honest and so forth, but you figure most people, the rule with 1099s is that if you've made under $600, the person doesn't even have to give you a 1099, but they can report that amount on their tax return, which reduces their tax liability. So it's just a matter of trying to balance it all out.
Oh, boy.
Yeah.
It's a long time coming.
Well, there are a lot of things that are a long time
that's
coming.
amazing.
Right, okay. So, okay.
Yes, keep
Okay.
going, girl. This is
Okay.
chilling.
Now, here's a really, really, really big one. Local tax withholding. So now I'm going to move away from IRS and talk about the municipalities, the little nooks and crannies that we have, the Pitcairns, the Turtle Creek, nooks and crannies, Braddock Hills,
North Versailles.
North Versailles, Irwin, all the little local municipalities, Homestead, Munhall, all the little local municipalities, Westview, West Mifflin, all of them. They cannot continue to function the way they have been functioning. So Pennsylvania this year is taking steps to make sure that the municipalities are going to get the earned income tax from its constituents, from its residents. There was never any system in place for local municipalities. And as a result, when people move from one place to another, your job knows that you moved because you told them, but they might still be paying tax to Wilkinsburg, and now you've moved to Squirrel Hill or someplace, okay? So Pennsylvania, the State Department of Revenue is now going to ensure that there is a statewide system in place to ensure that all municipalities get
Their fair share.
their fair share. Most municipalities will tax you at the rate of 1%, okay, for the whole year, which is not bad, okay? And if everybody in the municipality is paying its local tax, you wouldn't ride through municipalities and see no stop sign, no lights.
Right.
Lights been blinking for 2 years, can't get fixed because they don't have any money.
Right.
They can't do it. So this way, they'll be able to take care of those things. Now, what that means is the employers are the ones being told to withhold local tax from every employee.
Which means that their accounting system has to be revised to do that.
To do that. It's going to be a nightmare. However, once it's all together and straightened out, it will be okay.
Yeah.
Until that happens, as a taxpayer, take your responsibility in making if you get your paycheck and you see there's no local money coming out, put something aside. You know what I mean? You can't go to your accounting department and they've got 30, 40,000 or even 200 or 300 employees and say, you didn't take local taxes out of my money. There's no system in place to do that, okay? But you as a taxpayer can do that. You can identify, well, I know my borough or my municipality or my city will tax me at the rate of 1%. And I know that at the end of the year, I'm probably going to have earned somewhere around $52,000. So $52 is going to be, or a little over, is going to be what your local tax is going to be. Put it aside so that at the end of the year you can pay your local tax. Okay.
I wonder if the municipalities have developed some way to receive that even before.
They have.
Oh,
You
okay.
can, oh yeah, absolutely. They've got the
So,
forms.
so they can go
They've
in
got
and
the
pay
form.
it, maybe even pay it in advance.
Yeah, you can go
And
in.
then-
you can go in. A lot of
Yeah.
municipalities want you to do that once every 3 months. Some
Okay.
municipalities say, no, we want you to pay us once every month. okay? But yes, you can go to your local taxing body, find out who it is in your area, and go and pay your local withholding,
Okay.
okay?
And
All right.
there will be no surprises.
And there's no surprises. Exactly. Exactly.
Okay.
Exactly. Okay. All right. Okay.
She's got some nuggets for us.
Okay. Do I have nuggets? Oh, I think that's it. I think did I go through everything that I wanted to go through? I think so.
Okay, now I asked you to go over again about
The withholding, the married filing separate. Married filing separate, again, is the worst filing category anyone could ever choose because it will reduce any benefit that
Are
you
you going to
have.
help us, Uncle Sam?
Amen. Amen to that. That's it.
And
That's it.
that's
That's it.
you know, if you love
Right.
your uncle,
Yeah, then do it.
Don't you know? Just give him all your
Just
taxes.
give them all the money, right?
You
But
know,
right, right. Yeah, because actually what it does is it puts both of you in a single category, which is a much higher tax category, much higher rate tax category. Okay, right.
And then just want to go over the fact that if you do that, you do not have to be in the same room.
Right.
All you have to do is agree that that is the best for the two of you, and then make arrangements to have that done.
Absolutely.
Agree for money's sake,
Ag-
because you're both going to benefit.
Exactly. They're both going to benefit.
Yeah.
They're both going to benefit. And as I said earlier, your refunds go in two separate bank accounts.
Two separate
Two
bank
separate
accounts.
bank
That's the
accounts.
good part.
Right. Okay. Yeah.
To make everyone feel comfortable.
Right.
And
So-
one partner would not be able to get the information from the other partner.
No.
It just wouldn't happen because
Right.
you have to have someone who, who walks with integrity.
Correct.
You have to believe in that person. And, but the
Right.
thing is, if you agree, the wife can come in at one time, the husband can come in at another time. However, your information would not be given to the other party. That could never happen, or it wouldn't work.
It wouldn't work. Right.
It wouldn't work.
Exactly. It wouldn't work. Right. Okay.
But I think all those things have to be said out loud because, you have to feel and know that there's integrity involved in getting this done this way. Because once you're separated, there's a lot of distrust and, but this is just one time that you can come together for the good of the both of you.
And the family, because most divorced people have kids.
Yeah.
And so forth. So this also helps keep money flowing for their sake as
That's
well.
right.
Absolutely. Absolutely.
That's right.
Right, because if you're single, you can't really claim the kids.
Right.
So you lose all of that. You lose so much. Right. Yeah. Couple of things
Okay.
that I can review with them, and that is this year, the 2011 season, we no longer have the Making Work Pay credit.
Making
Work Pay credit. Last year, we had and I think the year before, we had the Making Work Pay credit, which was a credit that everybody could get. The maximum amount you could get was $400 a person. So in some instances, depending on if it was a joint return, the husband and wife filing a joint return got $800 credit. Okay. A single person could get as much as $400.
And what is this called again?
It was called the Making Work Pay credit.
Okay.
Okay. It's gone. It doesn't exist no more Making Work Pay credit. What it did was it reduced your tax liability. It reduced the amount of tax that you originally had to pay by up to $400 a person.
So it worked
So
too well, and the government said, "Oops, you can't have that much money back."
It was a great credit. It was a
Wow.
great credit. So that's no longer in existence
Wow.
for this filing season. So you don't have the Making Work Pay credit anymore. And also last year, we had the first $2,400 of your unemployment benefits was not taxable. That's gone. Now all of your unemployment compensation benefits are taxable. Okay, so that's gone.
Our
And
uncle doesn't like us too much. Huh?
well, I think, I think with all the credits, the stimulus package, American Recovery Reinvestment Act issues were designed to help stimulate the economy because there were so many people who just were not making it no matter what they did. And there's so many hours in a day you can work, you know what I mean?
Right.
And they just weren't making it. So I don't knock the government, they tried something and it did work. It did help to get things going, help to stimulate things.
But it's
It
not
wasn't
something we can
perfect.
continue.
Right. It wasn't perfect, and people are making waves and issues about, well, he's the spendthrift person, but he was trying to correct what the other guys did, and so forth. But it's gone. And and also, so that's gone. But also, again, Social Security benefits are taxed now. Okay, I've said that before. I was at the end of a show one time when I said your Social Security benefits are taxable. They are still taxable. Okay, a portion.
Your
of them.
retirement's taxable as well.
Retirement, yes. And what people do is they take taxes out of your retirement. Take taxes out of your Social Security. Go to the Social Security Administration, complete a W-4, the same form that you used when you were working, to have taxes removed from your Social Security benefits. Okay, so that at the end of the year, even if you still owe, you won't owe. Instead of owing this much, maybe you'll only owe this much, or maybe you won't owe anything at all. Okay.
Can you specify how much to take out?
Yeah, you can. It's a W-4, so they're gonna withhold you as a married person, as a single person, or as a married person withholding at the single rate. You're either gonna claim yourself with a 1 or a 0. The smart person's gonna put zeros.
That's right.
Okay, don't claim yourself during the year. Wait till the end of the year when you're filing taxes, and then take your exemption. Okay, don't do it during the year.
But why do wealthier people do the opposite of that?
What do you mean the opposite?
They don't want the government using their money, and so they'll pay at the end of the year.
That depends. Well, first of all, they're not in the tax code book. They're off the charts. You're talking about people who make like millions of dollars.
No, not really. Because if they
She gave me
did,
a look like,
I would,
oh, no,
I
those
would be
people-
their friend for a long time.
Okay, so when you say they do just the opposite,
Yeah.
they're going to pay. I don't know that that's what they do for that same purpose, if they're depending on how much money they're making, because we see people, philanthropists for example, we see people doing what looks like, oh, that person's got such a big heart. And I don't mean to sound totally skeptical about a person who's trying to do something good, but when I see a report about, oh, they're going to buy this person a new house because theirs burnt down, or they're going to replace this for this person because it was stolen, my first thought is that's a great tax write-off.
That's right.
Exactly. So
everybody knows that, though.
Oh, right. So they give away a lot of money,
Yeah.
so that they can get their
credit
tax,
for it.
because their rate's way up here. So their rate's going to stay, but they're going to reduce how much money they're paying because they've done all these really great
good things.
Right. Right. Right.
You can donate to me. I am an organization in one. Donate and then marry me and then claim me.
Oh, Lord, have mercy. Okay.
Here we go again.
Here we go again. Yeah. So those things are, those are things. So I don't know that.
And
think there's
go over the
anything-
most common mistakes. We have about 5 more minutes. Just go over the most common mistakes, people not signing and.
Well, yeah, sign your return. Getting copies of your return. I have people who've come to me who they've gone to one of the services and they come in with this very beautiful packet and so forth, and I'm looking for a tax return. There's no tax return in there. Okay, there's no tax return in there. What's in there are all the forms that you've signed to get a refund, where they've sent your refund to a bank in California. Okay, and they charge you, I don't know, 100, 150 bucks or so. They use what we call a bank product. So unnecessary, so unnecessary. You do not have to take a $400 refund and use a bank product. The only reason why they do that is because that's how they get paid. Okay, so they use a bank product that might cost 200 bucks. So now your $400 refund is $200.
Okay, well, you know, here we go. This girl, she's
That's my ticket back onto the
she's
show.
my friend. Okay, smart cookie, but she frightens me every time.
But
Now wait a minute.
I had a woman last year. I love this lady.
Oh, wait. You know what?
This is what happened to her.
Is this the bank product?
Yes. This
Okay,
is what
please
happened to her.
Make it clear.
She went into, I won't say which service, to get her taxes done. They told her her refund was $400. Okay. However, when she came a week or so later, or they told her they were going to put the money in her account the next day, which meant they were going to give her a rapid refund. But they don't explain all of what is involved in rapid refund. Okay, so she just figures the $400 is going in her account, and the next day she can pay a bill. So that's what she does, and she writes a check to pay a bill, and the check bounces because there's no money in the account. So she goes back to them, and they're telling her things that she can't fathom. She's not understanding.
And they know that.
And they know that because this woman cannot read. Okay, and I know she had to say that to them because when she came to my office and I said, well, let me show you what they've done, and she said, Miss Michelle, I can't read. Okay, so I knew that they knew what they had done.
Right.
Okay, so when I looked through her folder, all there was were all these papers that showed what they had taken off of her, and I said, well, your refund is actually $100. So they took $300 off of her to process her refund through a bank product that was totally unnecessary. They did not need to do that.
Okay,
She
what is a
qualified
bank product? That's what we want to know.
It's a way, in other words, if you walk in and you say, can I get my refund tomorrow? They're going to say, oh yeah, we can do that. But
And that's the one that's like
you,
300% increase in something. What am I trying to say?
I don't know. But
Like a loan. It's like a loan.
It's like a loan.
But it's a 300% increase.
That's right.
And I mean, they talked about this on the Today Show. Okay. And they said it is the worst investment as far as our returns that anybody could possibly do.
Absolutely.
The amount of money that you give up.
That's right. You give up astronomical amounts of money to the point where I don't believe rapid refunds are being used today because people have just been ripped off by these rapid refunds, completely ripped off.
But you know what? Is there anyone who could fight for that lady? That's horrible.
I know. And we are fighting against her and fighting for her against all of that sort of activity. So I belong to organization of tax professionals, and we get the opportunity to identify to the government what we have encountered.
What needs to be fixed.
Exactly.
But to hurt a little lady like that who can't read,
I know,
to take away $300 of her $400. Okay,
but
I'm going to get that lady's money back.
Well, let me tell you what happened to that lady. I was sitting in my office just a few days ago, and I looked up, and here she was coming through the door. She had on this beautiful bright red coat, and her hair was gorgeous, and she had this big smile on her face, and I gave her a big hug. I was so happy to see her. And she said, I came to you, she said, because I want you to do my tax return this year. And I said, well, great. And so I prepared her return, and this year, she's going to get back almost $1,100, and she's getting it. I'm not taking,
Wow.
Yeah. She's getting it.
That's
She's
crazy.
getting $1,100 is going to go directly into her bank account. I gave her that she has the verification, that it will be there.
Yeah.
So, so she's vindicated to a
Yes,
point.
yes,
She's vindicated.
yes. Well, thank God. I am so happy.
Yeah, she's vindicated. We got her her money back.
I don't know
We
your
got her
name,
some money.
but I was gonna fight for you.
Yeah. Well, I was
But
fighting.
but
for her.
little lady right here, she handled the business.
Yeah.
But I'd like to thank this lady, Miss Michelle Alexander of Jackson and Jackson. And she is a tax professional, and she does good things, and that's why we keep having her on, because I like to get surprised.
I do too. You give her
I
my
like
number?
the shock factor that she brings to the table. Like, you've got to be kidding me.
I know. You give her my number again?
Yeah, go ahead.
My number is 412-224-4022. I'm right in downtown Pittsburgh on the bus line, so please give me a call.
Yeah, give her a call if you have any kind of questions, because she can answer them for you, and she'll get things done for you. And I know this for a fact. All right? And not that I've had any tax issues. No, not me. I'm just kidding. Everybody has stuff.
Yeah.
So, but I'd
yeah.
like to thank you for watching, and keep on watching every Tuesday night at 9. Bye-bye.
Bye.